You remember the day you got the offer letter? $60,000 a year? You read it twice, maybe 3 times, because that number felt like you'd finally made it. You did the mental math in the shower that night. 60,000 divided by 12? That's $5,000 a month. $5,000 hitting your bank account every single month. You started thinking about what that looks like. A nice apartment, maybe not luxury, but definitely not the dump you've been renting. A reliable car, actual groceries instead of whatever's on sale at the dollar store, maybe even a vacation that doesn't involve sleeping on someone's couch. You felt it, that exhale, that moment where you thought, okay, I'm going to be okay now. And then you got your first paycheck and something felt off. The number was smaller than you expected, like noticeably smaller, but you told yourself that's just taxes. Everyone deals with that. It's fine. Then rent came out, then the car payment, then insurance, then the student loans that got you the degree that got you the job, then gas to drive to the job, then lunch because you forgot to meal prep again, and there's a Chipotle next to the office. Then the work clothes because apparently you can't show up in sweatpants even though you sit at a desk all day staring at a screen. And suddenly you're 3 months into your $60,000 a year job and you're checking your bank account before buying groceries. Again, you're doing the same mental math you did when you were making $35,000, except now you're supposed to be comfortable. You're supposed to be past this. So what happened? Where did the money go? Well, here's what happened. You got scammed, not by a Nigerian prince or a crypto bro on Twitter. You got scammed by the most normalized, most accepted, most invisible financial illusion in the entire modern economy. The salary number itself. My name is Matt, and I spend way too much time thinking about the gap between what people think they earn and what they actually take home. If you've ever looked at your salary and wondered why it doesn't feel like that number, if you've ever felt like you're doing everything right, but the math still doesn't work, make sure to hit that subscribe button and give this video a thumbs up if it ends up changing how you think about your paycheck. Because here's the thing that nobody tells you when you accept a job offer. That salary number on your offer letter is a fantasy. It's a marketing number. It's the sticker price on a used car that nobody actually pays. Except in reverse. You're not paying more than the sticker price. You're receiving dramatically less. And by the time your $60,000 passes through every hand that gets to touch it before you do, you're left with something that would genuinely depress you if you sat down and calculated it. So let's calculate it. Let's trace exactly where your $60,000 actually goes, dollar by dollar, deduction by deduction, until we arrive at the real number. Let's begin with the most obvious cut, federal income tax. On a $60,000 salary, your effective federal tax rate lands around 12 to 14%, depending on your filing status and deductions. Let's be generous and say 12%. That's $7,200 gone before you bought a single thing, before you've paid rent, before you've eaten a meal, before you've put gas in your car. The federal government takes their cut first, always first. But the feds aren't the only ones standing in line with their handout. Your state wants a piece too. The average state income tax rate across America is about 5%, though it varies wildly depending on where you live. If you're in California or New York, it's higher. If you're in Texas or Florida, congratulations. You caught a break on this one. But for the average American, we're looking at another $3,000. That's $10,200 in income taxes so far, and we haven't even gotten to the fun part yet. FICA taxes. That's Social Security and Medicare. These aren't optional. They aren't negotiable. They come out of every single paycheck at a flat rate of 7.65%. On $60,000, that's another $4,590. Now here's what's kind of infuriating about FICA. Your employer also pays 7.65% on your behalf, which sounds generous until you realize that money could have been part of your salary instead. Economists almost universally agree that the employer's share of FICA is functionally paid by the employee through lower wages. But that's a rabbit hole for another video. For now, your share alone is $4,590. Let's add it up so far. Federal tax, $7,200. State tax, $3,000. FICA, $4,590. That's $14,790 gone to taxes. Your $60,000 just became $45,210 before you've spent a single dollar on your actual life. And most people stop the math right here. They look at their take-home pay, roughly $3,750 a month, and they think that's what they earn. But we're not even close to done, because taxes are just the beginning of what your job costs you. Let's talk about health insurance. You know, that thing your employer graciously provides as a benefit, except it's not free, not even close. The average employee contribution for health insurance premiums is around $6,000 per year. That's for a single person. If you're covering a family, you're looking at closer to $16,000. But let's stick with single coverage since we're talking about an individual salary. $6,000 a year. That's $500 every single month deducted from your paycheck for the privilege of having a $2,000 deductible, which means you're still paying out of pocket for basically everything until you've spent $2,000 of your own money. And if you actually get sick, like really sick, the copays and out-of-pocket costs pile up fast. But let's just count the premiums for now. Your $45,210 just became $39,210. Now here's where most financial discussions about salary stop: taxes and insurance. They'll tell you your take-home is around $39,000 on a $60,000 salary and call it a day. But that calculation is fundamentally dishonest because it ignores every cost you incur, specifically because you have this job. Costs that wouldn't exist if the job didn't exist. And these costs are enormous. Let's start with getting to work. The average American commute is about 28 minutes each way, which adds up to roughly an hour of driving per day. But it's not just the time. It's the gas, the wear and tear on your vehicle, the oil changes, the tire replacements, the insurance premium that's higher because you're driving more miles, the depreciation on your car that accelerates with every mile you put on it. The IRS sets the standard mileage deduction at 67 cents per mile for a reason. That's what it actually costs to operate a vehicle. If you're driving 30 miles each way to work, that's 60 miles per day, 300 miles per week, roughly 15,000 miles per year just for your commute. At 67 cents per mile, your commute costs you approximately $10,000 per year. But let's be conservative. Maybe you live closer. Maybe you carpool sometimes. Maybe you drive a fuel-efficient car. Let's say $6,500 for commuting costs. Your $39,210 just became $32,710. But we're still not done. Let's talk about the stuff you buy specifically because you have a job. Work clothes. Even if your office is business casual, you're still buying clothes you wouldn't otherwise own. Khakis, button-downs, dress shoes, maybe a blazer for meetings. You're not wearing this stuff on Saturday. This wardrobe exists exclusively for your employer's benefit. Then there's lunch. Yeah, you could meal prep every Sunday. Some people do. Most people don't, at least not consistently. The average American worker spends between $10 and $15 per day on lunch when they're not bringing food from home. Even if you're disciplined and only eat out twice a week and you're spending modestly the rest of the time, you're still looking at significant food costs that are directly tied to being at work. Add in the coffee you grab on the way in, the after-work drinks with coworkers that you feel socially obligated to attend, the birthday cake collections, the team lunch outings. Conservatively, work-related food and clothing costs run about $3,500 per year. Your $32,710 just became $29,210. Now let's talk about the elephant in the room. The one cost that most people refuse to connect to their salary, even though it's the most directly connected expense of all: student loans. That $60,000 job didn't just appear out of thin air. You needed a degree to get it. Maybe you needed a specific certification, a master's program, or at minimum, a 4-year bachelor's degree that took you, well, so 4 years and cost you somewhere between $40,000 and $100,000 in tuition, fees, room, and board. The average student loan payment in America is about $400 per month. Some people pay more, some pay less, but $400 is a solid middle ground. That's $4,800 per year that you're paying for the education that was required to earn this salary. And here's the part that should make you genuinely angry. Nobody counts this as a work expense, but it is. It absolutely is. You didn't go to college for fun. You didn't take on $50,000 in debt because you were passionate about Introduction to Macroeconomics. You did it because every single job posting you looked at said bachelor's degree required. That degree was the entry fee. It was the toll you had to pay just to be allowed to sit in that office and earn that salary. Not counting student loans as a work-related expense is like not counting the cost of a taxi license when calculating a cab driver's earnings. It's intellectually dishonest, but it benefits the people who want you to feel grateful for your $60,000 salary. So $4,800 for student loans. Your $29,210 just became $24,410. And then there's the last category that nobody talks about because it's hard to put an exact number on, but it's very real. I call it the exhaustion tax. These are the expenses you incur not because you chose to, but because your job has consumed so much of your time and energy that you can't do things the cheaper way. You order delivery instead of cooking because you got home at 7 p.m. and you're mentally destroyed. You pay for a cleaning service because your weekends are the only time you have to actually live your life. You buy the more expensive but more convenient option at the grocery store because you don't have 3 hours to compare prices. You pay for the subscription services that help you decompress from the stress of work. Netflix, Spotify, whatever keeps you sane during the 2 hours of free time you get each evening before you pass out and do it all again. These aren't luxury expenses, they're the cost of having a job that takes 10 to 12 hours of your day. The exhaustion tax varies person to person, but conservatively, it runs about $2,400 per year. Your $24,410 just became $22,010. So, let's look at the final number. You started with $60,000. Your $60,000 job actually puts $22,010 in your pocket. $22,000. That's what you get to spend on your actual life. Your rent, your groceries, your phone bill, your existence as a human being on this planet. 22 grand. And here's where it gets even more depressing. Let's calculate what that means per hour. Not based on the fantasy 40-hour work week. Based on the actual time your job consumes from your life. You officially work 40 hours, but your commute adds 5 hours. Getting ready adds another 5. Decompression time, that hour or two after work, where you're physically home but mentally still at the office, another 5. So your 40-hour job actually takes about 55 hours per week from your life. Over 50 working weeks, that's 2,750 hours per year. 22,000 divided by 2,750 hours. Your $60,000 a year job pays you $8 per hour. $8. There are fast food restaurants that pay more than that. And the fast food worker doesn't need a bachelor's degree. They don't have $50,000 in student debt. And they don't need business casual clothes. They get free meals during their shift. And nobody pretends they should feel grateful for their salary. Now I know what you're thinking. Matt, this is incredibly depressing. Why would you do this math? And look, I get it, but here's why this matters. The salary illusion is the foundation of every bad financial decision people make. When you think you make $60,000, you take on rent that seems reasonable at $60,000, but is devastating at $22,000. You finance a car that seems affordable at $60,000, but is insane at $22,000. The entire economy is built on this illusion. Every advertisement, every financing offer, every you deserve it marketing campaign is targeting your gross salary, not your real number. But here's where this gets interesting, instead of just depressing. Once you see through the salary illusion, you start making completely different decisions. First, you stop measuring opportunities by salary alone. A job offering $70,000 isn't necessarily better than one offering $55,000 if the commute doubles, the state taxes are higher, and the cost of living eats the difference. You start asking questions in interviews that most people never think to ask. What's the insurance premium? Can I work remotely? Because shaving an hour off your commute might be worth more than a $5,000 raise when you run the real numbers. Second, you start optimizing for the deductions instead of the gross number. Remote work eliminates commute costs and slashes your exhaustion tax. Moving to a state with no income tax puts $3,000 back in your pocket. Nobody's making TikToks about optimizing your state tax burden. But each one of these moves has a bigger impact on your quality of life than a modest raise ever could. Third, and this is the most important one, you stop trading time for a salary and start thinking about what your time is actually worth. That $8 per hour number isn't just a depressing statistic, it's a decision-making tool. When your boss asks you to stay an extra 2 hours on a Friday, that's you working for $8 an hour on a Friday evening. When you check work emails for 30 minutes before bed, that's donating $4 of your time to a company that would replace you in 2 weeks if you quit. This reframe is what I call the real rate awakening. You start protecting your time the way you protect your money, because you finally understand they're the same thing. And here's what should keep you up at night. The salary scam doesn't just affect your money. It affects how much of your life you actually get to live. You spend 2,750 hours per year on work. You sleep 2,920 hours. That's 5,670 hours gone. There are 8,760 hours in a year. Subtract errands, chores, cooking, cleaning. You're left with roughly 2,000 hours of genuine free time per year. That's about 5.5 hours per day. And your job is paying you $22,000 for the other 18.5 hours. So what do you actually do with this information? Let me be clear. I'm not telling you to quit your job tomorrow and start a podcast. That's terrible advice, and anyone who gives it is probably trying to sell you a course. But I am telling you to start making decisions based on your real number. Budget based on $22,000, not $60,000. When someone offers you a new job, compare the full equation. The commute, the insurance, the work culture. Sometimes a $55,000 job with a 10-minute commute and genuine work-life balance pays you more real dollars than a $75,000 job that eats your life. And most importantly, start building something on the side that doesn't have a salary cap. Something where 20 different hands aren't reaching into your pocket first. Look, $60,000 is not a bad salary, but it's not what it looks like on paper. And the gap between what it looks like and what it actually delivers is where financial stress lives. That gap is where the shame lives when you think something must be wrong with you because everyone else on $60,000 seems fine. Except they're not fine either. They're just pretending. $22,000. That's your real number. Not because you're bad with money. Not because you're irresponsible. But because the game was designed this way. The question isn't whether the game is fair. It's obviously not. The question is, now that you can see it, are you going to keep playing by their rules, or are you finally going to start playing by yours?